Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode explores a new topic with a guest who brings their unique experience and knowledge. Tune in and discover something new each time you listen.
Hello, welcome to Bank Talk. My name is Rich Carty, sales executive here at Remedy Consulting. Today we have a great episode where we'll be talking with the CEO and president, John Blizzard at Seattle Bank. He's also founder of CD Valet, a digital marketplace helping community banks and credit unions compete for deposits by making their CD rates visible and accessible to savers nationwide. With over 30 years in banking, John brings deep insight into the deposit strategy, digital growth, and what smaller institutions need to look at and think about to stay competitive. So hopefully you enjoy. And John, thanks for joining us today.
Thanks for having me on, Rich.
No problem at all. Why don't you give us a little bit of a background on yourself, maybe a little bit more on Seattle Bank, maybe a focus area, and then obviously CD Valet.
Yeah, sure. Yeah, I've been around a few years. So, started like many CEOs, I think, of this era, started in a branch, but have worked for big GSEs, have worked in mortgage banking, and been CEO of Seattle Bank and formerly a CEO of another bank for a couple of years. So all told, about 14 years as CEO of community banks. And so we took Seattle Bank in 2014 when I joined and created, a single branch. At that time, we had a number of branches and decided we wanted to get out of the branch banking business.
Okay.
And focus on business clients, high net worth clients, and be more tech enabled. So years we built a variety of business lines that have been great. We have Boutique Bank. It's our local bank focused on those customers, high net worth business clients. We have an embedded finance business that's a really good business. It's nationwide, embedded credit and some deposit things that we're doing there that's super strong. We have a very good technology foundation for that. We don't rely on middleware at all for that, which is great.
Yeah.
And then we created CD Valet, and that was something where we saw as a community bank years ago, two things, I guess. One, we saw how hard it was to compete digitally. If you're a smaller community bank and you're going to go on the big World Wide Web and compete with the big boys, meaning Goldman Sachs, Marcus, Ally, Capital One, that have been around a long time, Bankrate, NerdWallet, and are very sophisticated in SEO and digital marketing. The banks are way, way behind generally in terms of the consumer acquisition and how to play in that game. So what we discovered is the small banks and credit unions are not seen very well. You can go buy some Google AdWords and stuff, but generally you're just it's just going to be very difficult for you to be competitive out there. So we decided, and because we have a single branch, we have a sophisticated clientele at our bank. We've always paid attractive deposit rates. Yeah. And we have some growth spurts. So we like the ability to go in and raise CDs, raise deposits when we need them. And we decided, hey, we could go build something better than a bank rate that was built for the big internet banks. And we could build something that was for the smaller institutions, banks and credit unions, and the big ones can play. It's an open field of who can be on our site, but we created a site that is the most comprehensive by far in the nation. So a consumer can come to our site. We track 40,000 different CD products across all the banks and credit unions. If they have a publicly available rate, then we track it and put it on our site. So consumers can come to our site and do their shopping, and then the financial institutions can decide, hey, I want to be actionable on CD Valet. So I want to have that connect right to my digital account opening. Customer can say, open now to open a bank iOS CD, and it'll go right to their digital account opening. And then we get a fee for that. But it's really great. There's two major keys here. One was there was a need for the community institutions to be able to compete. The other one was there is a massive amount of savvy savers out there that have a lot of money. And in doing our research and working with these clients, this is an area the banks have really not paid attention to. They call them hot money and all sorts of things. But this is a large customer base that has a lot of money, and they can certainly open CDs, but they can do other things as well. So not uncommon at all for somebody to have $1 million in CDs. And I can go through some of the stats with you later. But yeah, it's a huge customer base that's underappreciated. And we were like, wow, we can really deliver value to them and put these community banks and credit unions in front of them, so they have a choice and they don't have to just bank at Bank of America.
Yeah, I did looking at your site a little bit before kind of did our talk today. It looks like you have, what is it, over 5,000 institutions right now to choose from.
Yeah.
Are you able to track how many customers have been successful in maybe opening an account, or what that, maybe even talking a little bit more granular, what's that demographic? Who's using this most?
Yeah. So first of all, we've had somewhere in the range of 4.5 million consumers come to our site in roughly 3 years. So there is huge interest, and something like 600,000, 700,000 have been return users, come back multiple times. So there's very big interest from the consumer side. And then we track all sorts of data. We track all the rates every day. We put them in a data lake. We can compare and analyze the industry as well as individual institutions or a composite group of institutions, and to see how they do, how their rates move over time. But from the consumer standpoint, we know we don't have perfect visibility of all the leads we send to a financial institution. We can't track that in their systems, but we do have some data from some institutions, including our own bank. And just as one example, Seattle Bank did a campaign, and this was a few months ago or this summer, and in 6 weeks, there were 1,500 accounts. And of those accounts, the average size was $100,000.
Okay.
These are large transactions. This is certainly not their only CD. These customers have generally have a lot of money. This is their retirement, and they invest it. They're DIYers. They invest it themselves. Of course, people can do brokered CDs, but 2/3 of all the CDs are retail. Customers opening them up at their financial institution or a new financial institution. Only 1/3 is in brokered, where you just do it in your Fidelity account, right?
Yeah.
So these are large transactions. They move the needle for the banks for deposits, which is great. They're retail. They're generally going to be under 250 grand, FDIC insured. They're sticky. But you do have to compete. We strongly recommend to financial institutions to use the CDs that you're getting those clients as an opportunity to grow the relationship. So within our bank at Seattle Bank, we have a very well thought out onboarding process, marketing process to our new clients. We call the ones that look most promising. They love that when they can talk to a human. Our marketing includes human beings on the marketing materials.
Right.
It is an interesting blend of the technology and digital marketplace that helped us get the client, but then we use good old-fashioned community banking skills to then convert them and show them that we can do more for them. So we've had some great success converting somebody who started out with a $250,000 or $500,000 CD and ended up opening additional accounts with us for other things. So it's a strong customer base to go after. But like anything, you got to work it.
Yeah. You mentioned the term return users. I assume that would be, for example, someone going in buying a CD for a year, depositing the 100,000, and after that year going back in to maybe look at a different product or something. Is that what you mean by that?
Yeah, some of them have bought, some have just visited the site. So it's a mix of the two for sure.
Okay.
So one of the things is that we see a huge difference between the capabilities of some financial institutions that have built out to compete digitally and those that haven't. And I would say as an industry, we're just way behind trying to compete with the digital online banks, internet banks, we used to call them, right? Capital One, Ally. And as an industry, 2/3, we track all of the industry, who has digital account opening, who doesn't. 2/3 of the industry doesn't have digital account opening for CDs, which is just a remarkable number.
Right. Yeah.
So, and then beyond the technology, you need to have good technology, and there's several great players out there that have great digital account opening. But then you really have to have the structure, the processes, the people, the incentives I think of that as the other 50% to really compete digitally. It's not adequate enough to just go plug in a new technology if you don't have the people and processes focused on, hey, guess what? A customer is going to get stopped at IDV or funding, and they're going to need, have a question. So be prepared to answer their question in whatever form they ask that question, whether they're emailing you or chat or whatever. Those client services type processes need to be embedded. But anyway, it has been a bit shocking just looking at the kind of haves and have-not. There's some very strong banks that have digital account opening and a real focus on being successful online. And then there's a whole bunch that really just haven't gotten there yet. The thing I would add is that the other thing we like on CDs, not only are they large accounts, the fraud is super low. So if you've ever attempted to open up offer like a digital brand for a checking account,
Yeah.
there's a high level of fraud or fraud attempts, and that costs you, by the way, to make all those. But in CDs, it's just a terrible product to try to commit fraud. So we just see very little of it. And so that's another benefit on the CD side.
Yeah, that's obviously a nice peace of mind. Say for instance, though, one of these banks that you mentioned, obviously there's a lot out there that don't have the digital opening capability. If they wanted to work with a CD Valet, are you able to assist them with that process? And then what does that partnership look like?
Yeah, we absolutely can help financial institutions think through that, refer them several good players. We have the one we use at Seattle Bank who is very good, but there's several players out there that we can recommend. We're happy to do that. We've offered to have financial institutions come in and look at our operational team.
Yeah.
And how we manage our CD campaigns. We're in the middle of one right now. This will be our third one in the last 2 years. And, we have a small team that's very focused on it. We're willing to share that with anybody that is interested in advancing their capabilities. So we'd love to do that.
Yeah, it's always good to spread that network and what's worked and what hasn't and what is out there to add to more potential wins. The other piece of that, I was playing around on the site. It's a really cool site. Similar, I know when auto insurance comes up, you can kind of play around with who you want to use. I mean, I like that you're able to do yours by US, regionally. There's a few different filters to kind of see what would be a nice option. One question I had on that is, and this might be getting a little bit too granular, but when you list them, it seems like you have your best rate possible, your duration for the CD or the product itself. How does the bank, how do you become a top one? Besides, what if you have 6 banks that are all offering 4.25%? I think was one of the numbers I saw today. How do you get to be that top number out of the 6 when that populates within the browser?
Yeah, that's a good question. I know we have a methodology, and maybe even by the spelling or something, or actually it might be that term, the longer the term first, because we do sometimes see that. You can't buy your way to the top. Like all of the traditional marketplaces out there, they're fake marketplaces. Somebody's paying to be on the top. They don't have the best offering. We all know this. 5 years ago, people didn't recognize it as much. Today, we recognize it in everything we buy online if it's a fake marketplace.
Yep.
And from day one, we said we're not going to do that. We're going to have all the rates. And if you want to see all the rates, we're going to show them to you in the order of highest to lowest. We will be adding reviews soon of the financial institutions, which will enable the consumer to see both, hey, price, if you will, the rate, and also the service level. So based on reviews. So maybe they're willing to go 10 bips, 20 bips lower with a bank that has a really strong review, right? Versus somebody with higher rate that doesn't have a great customer feedback.
Yep. No, that's
yeah.
I appreciate it. It's important to have an agnostic approach. And you could see that. I think it even says it when you kind of do a little research on the CD Valet side. But that's great. Let's turn and take a look at kind of where rates are today. We've seen a recent cut. We've heard that they're potentially doing some more. What are your thoughts on maybe what we're going to be seeing in the upcoming months, and what's the effect and things banks should be considering?
Yeah, for sure. I think a lot of us in banking are kind of economics nerds a little bit. So I'm one of those people who likes reading about all the different opinions and so forth, but never really make big bets per se on where rates are going to go, because really nobody knows in a more medium term or long term, right?
Yeah.
The world just changes too quickly. But in the short term, it sure seems like, hey, we're headed lower. The economy is slowing. So I think we can anticipate lower rates. Now, still, these are still much higher rates than they were in the post-COVID environment. And so I think really for the banks and credit unions, anybody that's looking at their funding, it always comes down to, when you think about pricing, how much do you really need new funding versus maintain your existing deposits? And so that is a big piece. So if you're a bank, for example, that's like, hey, we're going to have big growth and we're going to need to grow our deposits 50 million or whatever it might be, you're going to have a very different mentality than somebody that barely needs to grow them 3%. And so we see this, and we've seen in these environments like this where there was an anticipated Fed decrease, we've seen Marcus by Goldman be very aggressive and go out and offer really attractive, like 1-year CDs. And this was maybe 6 months ago or so. And it was illustrative, and they got a ton of business at pretty good and a cost effective amount to the cost of that client. And it shows as an example of how you're in a competitive environment. And so if you just do what everybody else does, that's not necessarily the right move, because banks all want to try to move the rates down as fast as they can, right? And protect or improve their margins. But sometimes the best strategy is to pay up a little bit where everybody else is going down and get a whole bunch of deposits and do it really cost effectively. So on CD Valet, it's very cost effective. If you come in and you can offer an attractive offering, and the customers know, the consumer know a good deal from not a good deal, and they'll react. So I think it's just a matter of your competitive positioning. How important are the deposits retail to you versus just borrowing wholesale? And there's a lot of banks. I used to be in the Federal Home Loan Bank system and ran our lending for the Seattle Federal Home Loan Bank. And there's a good use for wholesale funding, but I think in a lot of banks it's overused. So they don't really have a lot of capacity. If they've used up 25% of their liabilities in wholesale funding, there's not much cushion. So we've always felt at Seattle Bank like, hey, our wholesale funding is there for new opportunities that come across versus using it up as we go to save a little bit on yield. But anyway, different strategies. So I think with decreasing rates, it's a great time if you want to scoop up a bunch of deposits and try to convert some of these CD clients into broader clients. It's a terrific opportunity to do that.
Awesome. Yeah, that makes a lot of sense. So John, CDs get a bad rap sometimes as hot money, in quotes, I guess you can say. And you talked about building those relationships with some maybe retention type tactics. Can you explain maybe an example that have worked and maybe some that haven't? That would be maybe interesting for the listeners.
We'll be right back.
Ever feel like your tech budget's running the show instead of supporting it? You're not alone. Between bloated vendor contracts and outdated systems, a lot of banks are stuck paying more for less. And here's the kicker. Those big tech vendors, their contracts are built to protect them, not you. So if you're hesitating to make bold moves because of tech costs, it's time to flip the script. That's where Remedy Consulting comes in. We help banks take back control, cutting through the fine print, optimizing spend, and finding tech solutions that actually fuel growth. And we're offering a free review of your tech stack, spending, and vendor contracts. No pressure, no sales pitch, just expert insight to help you make smarter decisions. Even if we're not the right fit, you'll walk away with clarity and confidence. So go to remedyconsult.net or call 206-295-5776. Let's make your tech work for you, not against you. Thanks for listening to the BankTalk podcast.
Yeah, sure. We've had very good success at Seattle Bank with running a campaign, getting new clients, onboarding those clients, marketing. We have a drip campaign, email campaign that goes out to those clients over the life of the CD. We have our private client managers that work with our high net worth customers, they'll reach out to specific customers that have opened CDs and let them know more about the other products and services we offer. And we've had a doctor from New York decide to open up many more accounts, $1 million of deposits with us.
Wow.
And others, because a lot of folks have their main accounts at a big bank, and it's really hard to run a big bank. And so the service level generally is just not going to be there. So they are thrilled to have a human being they can work with. And people have a lot of complexity in their lives, so anybody can help them manage one area and make it a little less complex, the better off it is. So we found that to be very successful. Of course, some will come and go, and it doesn't, and truly are hot money, and they're going to look for the next best deal and they'll shop you. But we see it as a good opportunity to bring on new clients and, hey, provide the funding as we're making loans the other side. And the other thing is like, hey, we can be aggressive on our rates because we don't have a branch network, certainly at Seattle Bank. And if you're a bank or credit union that has a good yielding loan portfolio, you can afford to be a little more aggressive. And the reality is most banks have no idea what it costs them to get a new customer or credit unions. And the marketing budget, all that money that gets put billboards or signs on buses and so forth, that never really gets allocated as a cost of acquiring a customer. So the cost to acquire a CD customer for the dollar amount involved is incredibly economical. And so, especially when you compare it to, hey, what's it costing you to go out and generate a $4,000 checking account? That's a big number, and run that in basis points relative to your deposits. And so, of course, having a huge body of consumer deposits at no interest is very valuable. But it's one thing to have that versus go build it. You go build it, you want to replicate a big credit union or a B of A with their consumer base, you're going to have to, there's very few that can pull that off, a Chime or SoFi, but others really, that's the amount of money involved is astronomical to do that. The other one is like, hey, having a low cost deposit base from a commercial business, which is an awesome business, commercial accounts. You have a credit line with somebody for $2 million and they got their $1 million of operating accounts at zero at your bank. That's a great business. There's just only so much of that out there.
Yeah.
And so that's why CDs is a great opportunity for large clients that is really cost effective to get when you really look at all the math.
Yeah, I think there was an article, like, again, when I was doing a little research on this, I think it was September, you released something and it was the best CD rates by state. I mean, that goes right back to your example of, again, a doctor in New York finding a rate across the country that's going to work for them better when they're shopping it around. Yeah,
for sure. And you asked something earlier I think I didn't answer, which was the kind of age group or demographics of the consumers. And we've run that, and it is very strongly Gen X and baby boomers. And guess what? You know what? They're opening, when we did a campaign at Seattle Bank or the other banks or credit unions on our site that are active on CD Valet, these consumers are opening their account doing digital ID from their phone. There's 75-year-olds doing that and getting through it, and they're doing it in large quantities. So while there is a consumer base that still wants to come into your branch, there's a whole bunch of people who are just happy to work through that at home on their phone, which is pretty interesting. And we're talking about people opening $100,000, $300,000 CD and doing that all digitally. It's pretty crazy how far we've come from, say 2000. A 75-year-old today is way different technology-wise than a 75-year-old in the year 2000.
Yeah, we're not turning the clock on any of that, so I can only see that trend moving forward. Well, that's great. Thanks for sharing that insight too. Let's talk a little bit about the administration and if there was a different one in there. Do you think there'd be anything different with rates, whether that's 2 years from now or what we're doing now? Maybe just touch upon that quickly.
Yeah, well, hard to read, right? I do think if we saw the economy really start to struggle, like if we go from not adding jobs to losing jobs and we see the economy starts to, I think the administration is going to be very aggressive to try to recoup. And it goes well beyond just the rates, right? And so if you think of all the things that we did during COVID and before, so I think there is a chance that we have both these things, or we have a struggling economy and then a lot of fuel put on the economy, and we could see inflation come roaring back. It's just one of many scenarios, of course. the deregulation's been really great to see for the banking sector. I think it's harmed consumers to have so much regulation, and I'd love to see them like really update CRA, for example, and some other things that are completely out of alignment with reality and with helping consumers.
Yeah.
And so we definitely could see, if we had a change in administration, we could see a pullback on some of the loosening there of regulation. The stable coin and all that stuff, I'm not smart enough to know what's going to happen. It just seems like, I guess, it's moving faster than I would like this to see something that opens the access to the banking system. It seems like maybe not enough thought on that, but lots of much smarter people than I reviewing that area. There's a lot of talk that stable coins are going to pull deposits from banks, that's going to create a big headwind for banks on deposits. So we'll see.
Yeah, I don't want to stop this episode yet, but that's like actually we have one lined up to be released in the next. I think it's our next one, the one after. So you're getting ahead of BankTalk here, John. You already know our secrets, I guess.
Yeah.
Hopefully that keeps our audience as a cliffhanger as the next one rolls up. I did have one more question. I wanted to give you an opportunity to make sure that I didn't miss anything important as well. But we love seeing the smaller groups and FIs be able to compete with the bigger groups. And besides maybe having a little bit of higher rates on the CDs, and is there anything else between the data that you have that could maybe benefit them from what you've seen? Like, I think there was a CD yield curve I was looking into as well. Anything else that would be good for our audience? And then anything else that I missed that you might want to bring up?
Yeah, so we do have an analytics package that financial institutions can sign up for, where they can really monitor and look at the yield curve, look at their competitors, look at the whole industry, and really pick where they want to be competitive. So sometimes it's not about the best rate on like being like 6 months where everybody wants to be short.
Yeah.
Show your best rate. Maybe it's the 2-year, maybe it's term funding that could be really attractive to consumers. And a lot of other banks are just piled up short term, because once everybody thinks something's going to happen, they could be right or they could be wrong, or they could be right for a short period of time. So sometimes there's real opportunities in going against the crowd. We do have a data analytics package that banks can sign up for. And again, we're tracking all that information every day. They can look at all sorts of curves in there and so forth. Yeah, and I would just say, hey, we make CD Valet super accessible for the financial institutions to get on there, whether you're a $200 million bank or a $20 billion bank. We've had top 20 banks on the site before, and be actionable. We can tie right into your digital account opening. Very easily done. It's not a big tech lift at all, and get you up and running. And we'll collaborate with you about what it takes, what we're seeing, what it takes to win. And yeah, it's been a lot of fun, but we're kind of an open book in terms of helping other financial institutions succeed in this space.
That's great. Yeah, again, really appreciate that, John. And thank you again for joining us. I think this is a great episode of something everyone can take home and maybe put into place for 2026 and the new year.
Great. Well, thanks for your time, Rich. Appreciate it.
For the entire BankTalk audience, thank you for joining us today. Keep listening, keep learning. Have a great day. Thanks again.
Thank you for joining us on the BankTalk podcast, brought to you by Remedy Consulting. If you enjoyed today's conversation, please rate, review, and share our work with others. To stay up to date with future episodes, be sure to follow the show and turn on notifications. Thanks again, and we'll see you next time.